So I was in a parking lot, um, and you know, I always monitor and I have my alert set, and all of a sudden I was alerted and I saw, and matter of minutes, it dropped like anything. I didn't have anyone chance. I immediately posted something, but there was no way anyone can react. Even I could not react. Like personally speaking, I was stopped out. So there is no way anyone can react to the beginning. I mean, even if you detect. So I saw it happening, and in matter of minutes, it started dropping so rapidly. So the BTC drop was out of nowhere. It was so surprising for multiple reasons. For that day, that evening, for my time zone point of view, which is around midnight, UTC time, it was so unusual because Nasdaq was okay, futures were okay, um, DXY dollar index was going down, bond yields were down. So there were the macroeconomical factor point of view. There was no other news like anything, any major news were there, because as soon as it happened, I try to see whether it's news. Like always see the chart is doing something, and I was trying to see what is there any news which is driving, and I couldn't find anything. Not on Twitter, not on website, nowhere. And I was wondering that all the dependent factor which I mentioned were not negative from a Bitcoin point of view, and why this move happened. And then some people posted that on Binance somebody sold heavy position, and it triggered the sell off. But I mean, but the reason, of course, we would not know. We can assume that some big player exited, but we would not know motive behind it, and we would not know what is cooking up. So that is Thursday evening my time, which is midnight for UTC. um, and then comes Friday, and then I think it made a low, and that low is not broken yet. We know that that low is still not broken, right? If you go at 1 hour at this moment, this was the low, this ugly drop, right? And the surprisingly whole entire Friday, the stock market pumped, as we know, not just US but everywhere. Stock market pumped. DXY um, uh, went down. Um, and bonds were even like down by 2.5%, bond yields. So it was so surprising on Friday, because I thought maybe on Thursday evening, okay, this surprising move happened because there is some sell-off, and then of course the liquidation happens. So you get extra boost, and then the cascading effect happens, and that's why the severity of drops increases. but but then I thought, maybe, see, all the macro factors are positive, and even this drop didn't break the February low. If you look at the Feb low, if I zoom out, this low is intact, right? This low is intact. And then what I did was simple. I drew this line, and then okay, this is a perfect hit actually. So I back of my mind, I definitely am neutral at this moment. Simple reason being, it's because of Friday. It's not on Thursday when it happened, because when it hit, I knew that it hit, and it is still above this low, and there was a clean support line. So Thursday was not an issue, but on Friday, yesterday, whole entire day, that's where we go on 1 hour, whole entire day, it moved sideways, where stock market was pumping hard, and for good reason, because BTC would also pump hard, because there was no negative factor that was affecting BTC. And as you know, that Nasdaq is heavy tech heavy. Apple was pumping, all the tech stocks were pumping. So there was no reason why BTC would not do anything. Yeah, we should be thankful that there is no new low. But it was so disappointing that it didn't bounce when the stock market was pumping hard, right? So all the macro factors, as I mentioned, were in favor of BTC. Okay, on Friday, yesterday. However, BTC didn't do anything. As if somebody, pulled air out of the balloon, as if somebody just switch off the pumping machine. That kind of, and that reminds me actually, I'm just connecting data. We don't have information, right? We don't have internal. I try to find, but I don't have it. If you have, please share with me. A chart, I can talk about the chart, but I'm trying to see what might happen because my focus is fundamentals or macroeconomical factors where there was nothing negative about it, and stock market proved it. There was nothing about it. So there must be some reason related to crypto, not outside, but within crypto. And then we'll have to find out. Yes, there was news about Silvergate, and of course, Binance is always in rumor. So we really don't know right now what is happening with on Binance. Silvergate, I don't think it's a big deal. My personal view is Silvergate is just a financial institute. It's offering, banking service. So I don't think unless there is connection, unless they are holding something and they did something, I wouldn't know. But based on public information, Silvergate is not an issue to me because they unless they dumped it and they were holding, we wouldn't know that. That's the problem. When they're unregulated, they're not supposed to declare. Because in stock market, if somebody, a big player, sell in a big quantity, they have to declare, and we come to know because they have to file to SEC. So it's so easy. Like Elon sold Tesla, we would know. And because he was holding Bitcoin and it's a public company, he had to declare. But if he held it, he is not supposed to declare. You know what? He declared Bitcoin sell because it was held by Tesla, and by law he had to declare it. That's why. Otherwise, this crypto is totally unregulated. So if anyone sell it, they are not supposed to reveal. It's They are not forced by any law. So that's the challenge. So we wouldn't know unless some information is leaked out or they themselves declare that this sold. So that's the challenge. So at this moment, it's so speculative that what really happened, who sold, why it happened is mystery unless you know it. So if you know it, share with us. It's always good. So coming back to my earlier point that Friday's behavior, as if like pumping machine was turned off, is totally, and my suspect is Binance because it reminds me when Binance used to go for maintenance because these days they don't go down. Like Coinbase go down for maintenance, but I haven't seen Binance going down for maintenance. They must have done something good where they have backup servers and they are running, switching over and upgrading the system, some kind of redundant system they have. So they must have improved their system for sure. So these days they don't go down for maintenance. Or maybe they could switch off some coin, but the whole entire system I haven't seen going down. But when it used to happen a couple of years ago, the whole entire market used to stand still. Many of you know that. And this behavior is kind of that, as if Binance is turned off. So this is liquidity crunch, in my opinion. And there could be something happening within Binance at this moment. At least I don't know what is really happening because, and it's just so strange and silly, in fact, stupid, that if, let's say, we assume that Binance is the reason, what other exchanges are doing, why they're not pumping. So it's so actually disappointing that only one group or one company is driving everything. And as I mentioned 2 years ago, when Binance used to go down for maintenance, as if no other exchange exists because they wouldn't pump anything. Forget about pump, they would not even dump it. So it used to be like free, like like a feather, like floating in air kind of a price action, nothing much, gentle movement here and there. So that kind of environment, which is so sad in a way that only one entity is driving on. Again, this is based on behavior, not based on fact. Okay? So Yeah, it's mysterious at this moment. We'll come back to technical analysis for sure, but I thought maybe I'll share what I felt in last 2 days, and this is the reason why I'm neutral at this moment. When I say I'm neutral, it means that I would like to a certain higher level to hit, which I mentioned and posted, and I'm not bearish because Feb low is not taken out. Simple reason. So, and it is okay to be neutral sometime. Neutral is not like you don't know. I know it. Only thing is it's a gray zone because I know, for an example, let's talk technical now. Okay, I'll enable the, so the low is not broken. Thursday low is not broken. Like this recent low is not broken. Trend line, you see, this is support. So this structure is not broken. So this is still consolidation. And when it was here, if you open 2 weeks ago, like last 2 weeks, my weekly update, when it was here, I said it's unlikely to go and break out from here. That was my statement. And it went down. And I thought maybe this is a strong support, so it should bounce. And why not? Because there was also a trend line from here, which I had added that point in time. It was like this. And then this drop happened. I thought maybe it's not that bad because, it's still the horizontal point of view. The structure, if is not broken. So that was going on in my mind. So this structure was not this drop was not an issue because this was far from the Feb low. And it is more like a deviation from its continuation, like an attempt of breakout. You see how many attempts were there. And this, when it goes down like this, it's like a delay. It's delay, nothing else. And then, but it doesn't mean that it's going to go down and go for new low or something really bad. But of course, when it goes down by 5%, alts is going to go down by 10-20%, no doubt about it. And that we know about it, right? So when Bitcoin at resistance, and unless the Bitcoin breaks the resistance, we have to assume that if it goes down, then it's going to bring down alts together, right? Because when it moves sideways, it doesn't affect. Remember, these are the few things that I keep on repeating. If Bitcoin goes up, alt also go up. If Bitcoin moves sideways without drop, like 5% is a drop, not sideways move, then of course alt also lose their momentum and go down. And in this case, 5% plus 5%, around 10% drop, of course alts are going to lose their level, no doubt about it. So it is obvious. So now what happened is it reacted at this resistance, because this is resistance, this is R1, right? So in my point of view, technically speaking, if it has corrected from resistance, it is allowed, because resistance is where the price is stopped or restricted, and movement is restricted. However, what is important is that, okay, there was consolidation, attempt failed and it dipped, but how deep it goes, and that's what determines how bad situation is. And of course, we have to also see on a weekly time frame that what is happening to the trend, because this is still a daily time frame, and a daily time frame gives early indication, but not necessarily it will break the trend. So there are different people, like somebody thinks short term. For them, when the R1 is hit, they are on alert, very short term. Those who are, let's say, on a medium term, they are mentally prepared that if BTC is going to pull back, alts are also going to pull back. And as long as the Feb is not, because this is higher lows, if you look at it technically, this is low, January low or consolidation, this is February low, and this is March low as of now. So as far as even one day trend is not broken, forget about a weekly. So there are different types of traders, as I mentioned. The statement has to be for different types of traders in terms of their time frame and or time horizon. So those who think every other day, of course, they are in chaos, because Bitcoin is, or crypto in general, is not for them. and only mature people get into intraday kind of a movement. So it's this is unfortunate thing that a mature people or new to those who are new to trader try to track on every other hour or even every other day. Uh, Actually speaking, only the experienced trader are supposed to go at a lower time frame. Those who start new should actually start with the highest time frame, which is weekly. I don't advise monthly, but weekly. And as trader gets more experience, trader go lower and lower and lower. Of course, higher time frame will spot and then go lower and lower and lower. And they stop where they stop when they start making loss. And as a channel provider, I cannot go intraday. I'll go mad. This is 24/7. So I cannot give you every hour's update, though I'm giving on BTC analysis, which is crazy, like more update, like every day sometimes, or more than once in a day. That is really crazy from sustainability point of view. But I offer sometime when I'm free. As I mentioned, I posted when I was in parking lot. Sometime I post from even bathroom. You won't believe, if I'm alerted, I'm brushing my teeth, I would just post from my bathroom as well. So that kind of involvement is still there. But the point is, it doesn't mean that I'm supposed to provide every other hour. So that's why, and channel doesn't have that scope either. I mean, when I'm supposed to provide a couple of updates in a week on BTC. That's the whole idea. But I'm doing on top of it. So point is, if you're going very low level, you are by your own. That's my point, right? Because nobody can offer service at an update hourly basis. No way. No one can provide that kind of service or update that this is what is happening. Okay, so you're supposed to track at higher time frame, unless you want to go lower, but then you are doing by your own. Okay, so it's your judgment. So that's something I wanted to clarify. And of course, there are basic fundamentals. One of the users got upset, and I could ignore, but I don't ignore. For me, there are 100 plus or hundreds of users. Even one user is dissatisfied, I'm supposed to clarify. And I posted so many things. So that person will also understand, if he or she wants to understand, that you have to understand the basics. You have to read my best practices before you start using the channel. You don't expect that one pays for the channel and from one day you will start making money, because this is like you wanted to ride a train or bus, and you just on board and you expect that it will go to the next station or start moving up. No, this is not like train. That's why I give an analogy yesterday. This is a train where train stops at a station, which is resistance. But this train is not like real world train. This train could go backward and then go forward. And it could go backward to the previous station, like previous support, or even, even previous to previous and so on. However, it doesn't mean that wherever it began, it has changed the trend. But if it goes backward, it continues to go backward. At some point in time, we have to say, hey, this is reversing, right? So that's how it works. But at that station, nobody can say. So at R1, you cannot say that this is the top. You cannot say. You have to observe that how it behaves at R1 and so on. So, and this is still a daily, not even weekly. So those who join or start trading at R1 is automatically at risk, because you are trading at R1 where it is supposed to pull back or at least consolidate. So this is a fundamental trading thing, and I mean understanding and the basics, I would say. This is ABC, that you don't buy at resistance. There are two places you buy, not financial advice, but known fact. You buy when a breakout happens above resistance. Secondly, you buy when coin drop or price drops and hit a support and stabilizes and start rising, that's where you enter. And of course, in a breakout also, when if it breaks out and then goes up and then comes down, and sometimes there is a false breakout. Let's say hypothetically it breaks above, you buy, and comes down, you are supposed to get out because your stop loss would be somewhere down just below the R1 fund in this case. You have to get out in that case. Similarly, if you buy at a support and it bounces, well and good, but your stop would be below the support and you're supposed to get out unless you want to be in trade. I'm not saying you have to be in trade, but point is, these are the two methods, simple methods, that you buy on breakout or you buy when bounces off the support. These are the two places. If you buy it in between, of course you will have the support lower, just in case, hypothetically speaking, if it is here and my R1 is here, you are buying somewhere in between, so your support is going to be definitely lower, and that's you have to calculate how much I should buy, because you have to calculate if it goes down without touching the R1, then what is my loss, and so, which I explained in my weekly and many times. So these are you can buy in middle also, of course, but then you have to see how far it is from the support, because you have to calculate your support. Your stop loss would be just below the support. So if your current value, for an example, is here and your support is somewhere here, you have to calculate that my stop loss is here. How much is the distance? Because I'm buying somewhere in middle, and this is R1. So if you're buying somewhere here, you have to know that if it starts going down, and if I'm going to exit somewhere here, for an example, right, then you need to know what risk I'm taking compared to the reward. So we have to see that this is my reward, this is my risk. This is, say, 50-50. So that's a proposition. Does it make sense? 50-50. The ideally 30-70 is the good, 20-80 is amazing, and 10-90 is awesome. So that's a value proposition risk reward ratio, we call, has to be determined, right? And these are fundamental things. So if anyone is buying at resistance, is like trying to assume that it will go off right from that moment. No, you have to see it happening. And as I said, sometimes it breaks out and not necessarily goes for R2. It comes down. We call false breakout. It happens. No worries. Your protection would be just below the R1. So if it breaks out, you take a trade, and you in that case you will be stopped out. There's another method in the breakout that often when a breakout happens. So when breakout happens, price could come down actually. So let me explain that as well. So this breakout happens, you buy on breakout, but sometimes this is throwback. We call throwback, means retest of the breakout. It happens. You will observe that. Not always. And that's why some traders buy with some percentage on breakout and wait for pullback. We call throwback. In a right term is throwback. And then it goes up. This is a behavior. So it breaks out, then there is throwback, retest, and then goes up. This is a typical behavior, but not always. Sometimes breakout is so powerful, so strong, that it may pause. It may not go down. It may pause like this, or and then goes up. So in that case, trader will have to ready that, okay, if it continues like this, then the second buy would happen higher, right? Even though it was planned to buy at this level. So the first buy happens on breakout, second buy is planned on a retest. But if retest is not happening, so you see, in this process, trader has to be involved, has to monitor what is really happening. You cannot just sit back and close your eyes. It broke out and I'll go for walk now. No, you have to set alert. you have to have a plan ready before you enter that. My strategy is, if it is going to break out, I'm going to buy this Bitcoin with 40% of my money. And then if it comes down, I'm going to add 60% of my money, and then I'll be 100% in Bitcoin. This could be a strategy or a plan. Or my strategy could be 40% here on pullback, 40% here, and maybe once it breaks out the previous high, which is this one over here, I'll add 20% more, and I'll be 100%, something like that. Percentage you can determine. Here it can be 20%, here it can be 40%, it can be 40% here. How you break down, it depends on you. Okay, so sometimes if you think that there could be false breakout, the start can be small, like 20%, 40%, and 40%, or 20%, 60%, and then 20%. So that composition is up to you, but this is a strategy. And as I said, if it doesn't pull back, or there is no throwback, and it does something like this, then this is your 20%, this is your 40%, and this could be your 40% somewhere here, like that. So, or wherever, it could be higher as well, right? So that these are the different flavors on breakout. So this is buying on breakout. Okay, now this is first method, and then planning around it. Second method is, of course, is where it hits the resistance, and then you wait for and if it pulls back like what it did here, then you buy here, right? But you know that it has hit a support. Usually when it starts going up, you buy here. Okay, you don't buy, I mean, when I'm not advising, but trader, I should use the third person, not the second person. So trader would not buy when it touches. Trader would buy when it bounces like this. But then the support is now it is trying to break above support. Stop loss is set below the support, below the low. You know, sometimes see low could be a little lower. Fine, your trader's support can be a little lower, like this. Not exactly at S1B. If this is a spike, if I zoom in, there's a spike. That's fine. So on bounce, I'm buying. Okay, if a trader is buying on bounce, my stop loss would be below this low, right? And then not necessarily in this case, it was looking really good, but remember the required level was higher. It didn't touch the required level. If so I had given required level. Why I given required level? Because as you know that when the bounce happened, there it's a 50% of the job. The required level is required to achieve. That is another 50% for it to make a new high. This is technical matter, and that's why required level. So if you totally ignore the required level and assume that nothing is going to happen, fine. If you go all in, right, on bounce, you will be stopped out. And those who do not put stop is actually making huge mistake. Of course, it's a crime. Okay, not having stop is crime. And I'm teaching you and sharing what I know, how I put stop loss, how I strategize. I hope this session, I'm digressing, but and whatever I said is not, I'm not saying for the first time, but I hope this recorded version will help you if you have to refer it again. Yeah, so this is, so you buy on support, but remember, good trader, it doesn't mean it doesn't mean that experienced trader do not get stop out. The beauty is they don't lose much. When I manage fund, when I say I manage means when I provide TA, I provide strategy, very granular strategy. Okay, and in that case, it's not that we are not stopped out. So as I mentioned, we stopped out as well. Not a big deal. We immediately bought here. And if it goes down, we're going to stop out again, or we'll exit. So what? So we will have some loss. But the reality is we made 18% of the money in this simple movement also. But you have to pay more attention to this movement. You know what I'm saying? So if it touches R1, you're supposed to sell. If you are very active trader, I'm not saying you're supposed to do. What I'm saying is if you're very active, right, at a personal level, the level is given because it could react, it could go up as well. So if you short here, oh, let me complete my thought. Actually, I don't want to change, but I'll come to shorting as well. So here you would buy, but your stop loss is here. And then in this case, it bounce was good, but not high enough. As you know, it didn't touch the required break above required level, and it failed there. So you would be stopped out. If it goes up, let's say hypothetically it crosses, if it had crossed, the smart trader raised the stop loss from here to break even. So in case if it goes up, because nothing is set in stone that once it breaks above this, it cannot go. There's no rule. It's a planning. So let's say it breaks above it, if it would have gone up and broken above this level, there's no rule that it cannot come down again. Okay. In that case, the smart traders raise stop loss and put at a break even, not necessarily go very close, because it's you learn from experience that if you go too close and it spikes down, like, then you are taken out for no reason. So you have to maintain some distance. I give one nice analogy. I don't know, especially in Hindi movie. I think in English movie as well. If there is a bad guy and there's CID or investigator, right? Police officer chasing that you if you are spy, you don't want to catch the bad guy, but you want to spy. What you do is you drive in a way that you don't go too close, that criminal would see you, and you don't want to be too slow, so you get lost or you lose that criminal. You know what I'm saying? So you try to maintain some distance as per that criminal's vehicle. You match and maintain the distance. And how much distance is good, you don't catch, you are not supposed to get caught by that criminal. So similarly, you are not supposed to get stopped out, and that comes with experience, right? And you will get it. But if you don't go too close, like if it is here, put at a break even. So even worst case, what happened if it goes down? If it goes down, and you're stopped out, you're fine. You lose nothing. It is disappointing that there was gain, but you cannot disappoint that you cannot expect to have a perfect in and out. In that case, you are break even, you're fine. You didn't lose anything, right? And so on. So, but in this case, it of course this is a hypothetical case where it would have gone up. So in current scenario, it of course it went up. You bought it, your stop is somewhere here, but this is not high enough where you will raise it, because if you raise it's too close. So if it is high enough and then you raise it, in this case it was here, so I would not raise and keep it here. In that case, I'm stopped out. But if I bought here and I'm stopped out, I knew that what risk I'm taking, which I mentioned in from a planning point of view. So you trader is going to buy on bounce and put a stop loss. So I'm going to use my calculation like this, that I'm taking a risk of 2.5%, 2.2%. So if I put 100%, this is what I'm going to lose. If I'm going to, so if this is high, and if I want to lose only 1%, because when you manage big, portfolio like couple of million or about a million, 3% is big number. In that case, my strategy would be to enter with 50% of the money, so $500,000, and then I'll say, okay, if I'm stopped out, I'm going to lose 1%, or I can go 1/4 and say, okay, even one, then my loss would be 0.5%. So this is the strategy, and then I would say, this is my 1/4 of the money here, 0.5% I'm spending, and then I'll put another 500,000 somewhere here, and then full 100% in when it breaks out. So I kind of ramp up I create a ladder and ramp up my buy not like go crazy and think, oh, this is the bottom and let me grab it. This is the lowest price. I cannot think this is what I got and go 100%. That's crazy. That's immature decision. So, but you will try, and one will realize that it doesn't work, right? So the right way is planning. If the support is very close, then it can be two buys. If you want a little more conservative approach, then it can be three buys. If the fund is big, then you have to be conservative. So in that case, I would buy with 250K here, somewhere here. I would put another 50% here, and remaining 1/4 I would put when it breaks out, and 1 million will be invested here. And by that time, I would be sitting on profit. Even if it breaks down from this, I have enough room, because my first trade is profitable, my second trade is profitable, my third trade would not be profitable if it comes down, of course. But my other two trades were profitable, so I have enough chance. What I'll do, I'll set my stop loss where there is break even. The third trade is not profitable, so in that, let's say it goes up. I'm extending the scenario. So first buy is here, second buy somewhere here, third buy somewhere here, but unfortunately it comes down. So what? It's not in my hand. The market, something can happen. My hand, what is my hand? Is planning, risk management, and people don't do that, especially when you enter, you have to have highest level of monitoring, highest level of attention when you enter. Before you enter, you need a plan, like what I just explained. After you enter, you have to really monitor. It's like you fly kite, as I mentioned. Beginning is difficult. Once wind takes the kite up, you don't have to worry. You can have drink and then fly kite. You don't have to pay attention. But you cannot be just forget about your trade after buying. So before buying, planning, and after buying, you are supposed to monitor because of unforeseen behavior or some strange behavior. So in this scenario, I bought 25%, then 50%, and remaining 25% here. Now something wrong happens, we don't know. And my third trade is not profitable now, but my first two trades are profitable. So I will do simple math and say, okay, now I'm going to raise my stop loss, which was here, and my stop loss will be somewhere where there is break even. So if it goes up from here, I'm survived. Again, my third, if it makes new high, right, somewhere here, my third trade will be profitable. In that case, whole entire thing is fine, right? And if it continue moving up, I'll be celebrating. Why? Because now I'm out of risk. Well, I'll simply raise my then I'll raise my stop loss. As I said, I'm going to follow the criminal. This is the criminal. Now criminal is here. It stopped here, came little. It doesn't happen in the real world, but here as I said, in the train example, it comes down. So the criminal as if reversed. So you cannot, you have to have that, room there. So if it goes up like this, and then you simply, if your stop loss is here at the break even, let's say, and then you simply raise. It goes up, you raise. It goes up, you raise. And you don't try to say, I'm going to sell on perfect top. There's no perfect top. Okay, but the goal is to close your position in profit. That's the whole idea. But you have to do this process, which I am recording this time. So I hope you will find this very useful, because if you are, I'm not saying you are supposed to follow it, but after learning this, nobody can say they were not told. Okay, I'm doing above and beyond. This is beyond TA, by the way. Okay, I'm revealing something which fund manager would do when I manage a big number. This kind of strategy we do. Okay, so whatever I shared today is above beyond $100 bucks that anyone pays on a monthly. But it depends if people ignore it, because I'm a small guy. I'm not someone big. I'm not big shot. So that also the case sometimes, who will listen to me here. his strategy, you know, I'm doing whatever I'm doing is right, fine. If your method is working, I'm not in a business to say this is the right way. Even anyway, I cannot say that. But if you think that your method is not working, try out something different, which I'm offering for so many years. So whatever I said is repeat, but I don't know. At least now, what I'll do is I'll say refer this video because I'm not going to repeat. Anyone who wants to know, probably I'll just point out, probably, so I don't have to repeat because this time I'm recording. Okay, so I hope this is clear, and feel free to ask if you have any question. Now of course we have to take the negative scenario where I bought it, of course, and then I'll be stopped out, right? In this case, because it went down. So I would have my loss, but loss of what? As I mentioned, if I put 25% of my money in Bitcoin, I would lose around 0.5% using that calculation, right? So that's fine. Then I buy again. Again, my stop loss is somewhere here. Let's say below low or this one. It's up to you because this is low and this is your support range. This is also low. So this is also low. This is a low. So whole entire region is support. Yeah, makes sense because this is where it stopped. So this is also support, and this is also support, which is very close. So automatically the whole entire range becomes a support zone. It's not exact price. So if I'm buying here because it's not going down, then my stop loss would be below S2 because this is my support zone, right? My support zone cannot be this much because my previous low is so close. So I will just do the calculation again. First trade failed, but remember, failing is not important. You may fail 2-3 times. That's not a problem. How much you lose when you fail? So first trade of my fails, let's say I lose 0.5% in Bitcoin case. 0.5% is not a big deal. If I lose even 4 times, it's 2%. It's still not a big deal from a crypto point of view, because when it pumps, my 2% will be recovered like that. But of course, after 4 attempts, you have to stop yourself because it doesn't make sense after 2% loss. Yeah. So let's say, so second attempt, if I'm making, if I buy here, I had to do this calculation. Now the depth is deeper. Like that was 2.5%. This is 4.5% roughly. So this is deeper. So I don't have a chance. If I put too close, I will be stopped out if it goes down and if it goes up. So the frequency of stop out will increase if you are too close like this. And again, let me tell you, if you put here, it doesn't mean you're guaranteed. Nothing, there is no guarantee. This is about probability and risk management. You have to understand the key levels. It offers you to plan something like what I'm doing here, real time. So I'm planning that my risk is around 4, let's say 5%, roughly speaking. So I don't want to lose. If I have $1 million portfolio, I cannot lose 5%. That is huge. Even $10,000 portfolio, 5% is a big deal. People take it very lightly, but you cannot take lightly. And another thing is, don't assume that your first trade is going to be successful. Assume that you might have to do in and out couple of times when you start. That's why each time you lose, you are not supposed to lose more than 1%. So even if you lose 3-4 times, you are going to lose 3-4%, not more. So this is another thing, that they think that you buy and it is going to fly. No, even the experienced trader is getting stopped out. As I said, I'm committing myself. I'm stopped because of this ugly move. What can I do? Okay, so like that. So, but if I go for second one, then it's not guaranteed that I won't be stopped out. I may, who knows? And I had to be ready. And that's why I had to put money only that is acceptable to me. If I put 100%, I'm going to lose 5%. It is not acceptable. So my risk appetite is only, again, for 0.5%, not 5%. That means 10th of my risk, 10th of the risk. That means my money has to be 10th. So if I have $1 million, I'm going to put 100K. If I have 10K, I'm going to put 1K. If I put 1K now, my loss is going to be 0.5%, even if it drops 5%. The problem is people are not ready to put 10%. They always want 100%. Not only 100%, they go leverage and go even more, 5x, 10x. And of course, then what happens? And when they lose big. So 10% of the money, 0.5%. As I said, 0.5% is my goal because I have $1 million portfolio. If you think that how your risk appetite is more, it's up to you. It's not a rule, but it's up to you. You can go for 1%, 1.5%, 2%, but you have to remind yourself that if the practically you are not unlikely to get first rate successful. Unlikely, you may, but you have to be mentally ready for 2-3 failures to begin with. So you are stopped out, you buy it at lower, you're stopped out, buy it lower. It is going to happen. So you have to have, I'm not talking about DCA. DCA is horrible and I'm totally against it. DCA, since I mentioned DCA, dollar cost average, where you buy here and then you again buy here, it drops again, you buy, that is DCA. You are averaging out your purchasing price. This is super dangerous because how would you know that it's going to bounce even from here? So you buy here, you don't stop. You don't set stop. You buy here. You don't set stop. You buy here, assuming it's going to bounce. What if your assumption is wrong? What if it continues to go down? You are in soup. You are in ditch. You're going. That's what happens with so many people. DCA is horrible. Where DCA is good, let me tell you, where the trend is already, uptrend is already established. Okay. When uptrend is already established, for an example, let's take in, since I mentioned DCA, I am supposed to give you at least some insight that where DCA makes sense. So this is bottom, this is consolidation, and this is uptrend. So now somewhere here it drops. It makes sense to DCA because the uptrend is in full swing. When it drops here, makes sense at DCA. It drops here, makes sense DCA. When it consolidates, it doesn't make DCA here because this is moving sideways. So this comes after experience, but it's not a big deal. Once you pay attention, you learn it. And with my example, you will learn faster, in my opinion. But provided, see, the first criteria of learning is not just listening. Remember, learning is not just about listening. Learning is also about unlearning, which is not working. I'm going to take a pause. Learning is not just about listening. Learning is also about unlearning what you know and what is not working. And that is the biggest hurdle. Because that unlearning doesn't happen, new learning doesn't come in place. That's why people don't progress. I'm not saying you replace your math. As I said, remember, I said unlearn which is not working. Remember the not working, right? You don't have to unlearn which is working. So if something is not working, you're supposed to replace it with something new. So it's not about listening. Hey, Mihir is making sense. That's listening. Logically, you are giving me approval, but you're not executing, right? So there are two steps to it. So I'm not saying you are supposed to, but if it makes sense, then you have to put in application and see for yourself that it works. So this DCA comes, DCA makes sense only when uptrend is established. We are here. This is not uptrend. This is recovery phase. In fact, this is whole entire thing is consolidation. Remember, right? So this is not, no way we can say uptrend is established, right? Coming back to, so the DC doesn't make sense. This is my justification. Okay. So now, so of course, DCA doesn't make sense. So coming back to my scenario, 5% loss. So you have to determine that what loss is okay for you, and that amount of money could be spent. Okay. Very simple. Now, if you're stopped out, again, you are going to lose for 0.5%. So 0.5%, 1%. And of course, you're going to stop because now Feb low is broken and I'm going to update that now its risk is triggered. So right now the risk is not triggered in a big way. I mean, of course, this is a neutral state, and that's where I started my session, that I'm neutral. Simple reason being is this trend is not broken, the consolidation is not broken, and the same time required level is not achieved. So this is where I'm neutral, right? And someone wants to buy, could buy, but then has to do the risk management study. So I gave BTC as an example. If you're not buying BTC and something else, you have to do the same risk assessment. Remember, alls are move more, so your risk exposure is more. So it's up to you. Not an advice, but times like this, which I mentioned on info channel, remember, not sure how many of you read it. I mentioned that you reduce your position when you trade, when situation like this happen, and before, and I mentioned before this drop, by the way. It's not that I'm saying now. If you check the info, I mentioned before this drop. That, and same thing I mentioned in my scenario. In my scenario, I didn't put 100%. That is about not going all in. And second thing is not going with something which is moving fast, because you cannot control it. So these are the two approaches, the position management and selection, which I posted on Bitcoin analysis, that one has to choose a proper coin as per the volatility and speed. Times like this, there's no time to be hero. Okay, this is not time to be hero, no matter how expert one is. Okay, so I mean, this is like taking out, you have a bike and you have a truck, and you want to take out your truck in a traffic jam. I'm trying to give analogy in from a simple word. So you have different vehicles. So the truck is like super fast moving coin, and your bike is your Bitcoin, because it moves slowest, right? Comparatively speaking. So you have different range of vehicles. You have to think about traffic condition and decide. Or you can, or if traffic jam is one situation, another thing is, if you want to buy something and go to a place which has very narrow roads, you don't want to take your truck, you would prefer your small car or bike. You know what I'm saying? It's a common sense that if I want to go to busy area, I don't want to get my big truck. I want to get something light, some narrow lane, alley. I want to take something which is easy to navigate. So same thing is here. Times like this, fast moving coins are dangerous. You will get stuck. And that's a common sense. But it's very difficult to keep the mind in check. But if you have these rules or guidelines in your book, before you think I want to buy, you're supposed to go through your guideline, your own notebook. If you will buy only if all the tech, if you get check mark for all, so this kind of discipline is needed, then only money is made. But many people lose most of the money during the consolidation phase. So there are few simple reasons why they make you lose money. First of all, they don't put stop. Second, they go all in. Third, they go for high moving or fast moving coin. They totally ignore what Bitcoin is doing, right? These are the three main reasons. There can be many other reasons, but these are the three main top reasons why they lose money. And of course, other factors, emotional factors, which are again related to these 3 points, right? Which emotional factors make you make you do mistakes like that. So you must have rule book, take all the good practices from your own lesson learned, and you're not going to buy unless the rule book says yes, it's time to buy. It's not just about time, but size. So timing, size, all together. Okay. So I hope this will be helpful. I'm going to stop the recording, so this can be a separate recording because I don't know, digress, but I think I'm going to stop here and come back to TA.